Welcome back to Small Caps, ladies and gentlemen. Kerry Stevenson here, talking with Australia's country manager for Shekel Brainweigh. Name is Danny Nadri. Now, Shekel Brainweigh, the ASX code is SBW, I think. I got that right? Yes, I did. Danny, welcome back to Small Caps. Good to see you.
Thank you, Kerry. It's a pleasure to be back again.
Well, last time I spoke to you was in March. Just before we get into some of the latest news, and I do want to talk numbers today, give us a brief overview on who are Shekel Brainweigh.
So Shekel is really a mature company. It's been around for more than 4 decades, and it has one core business that deal with sensor technology and especially digital weighing. And we provide these systems to very large companies around the world, as well as some products that we branded ourselves. Been always a profitable business, growing probably in a range of $2.5–3 million US a year in positive EBITDA this year. And that has been the major business since the beginning of the company. Now, 5 years ago, we pretty much acknowledged that major development in artificial intelligence, if we combine them with our sensors, we can actually create a new enabling technology, a piece of technology that you could fit into different places and will enable things that wouldn't be able to be done before in a cost-effective way. That drove a development of about 2 years into establishing the tech. And in the last 3 years, 2.5–3 years, we've started seeing commercializing it in different applications, predominantly with what we call the smart fridges, smart coolers, and autonomous stores and micro market solutions. So that's in brief what we see. So it's almost like 2 different businesses driven from similar core tech, and one part which is growing really nicely and profitable, the other one which is growing even more and is still require investment.
Yeah, and I guess the newer one, if you like, the very heavily tech one, that's got massive growth, because I think I saw when we're talking, because you're mainly talking, if you like, frictionless retail in that new growth business. Am I correct in saying that?
We're definitely targeting the need of automation in retail. So retailers around the world understand that it can't be manual anymore all the time. So you need to automate processes to make it a lot more efficient. I think in Australia, we see especially the implementation of self-checkout. We see a lot more self-checkout in different supermarkets. But that's a global trend that retailer needs to do things a lot more efficiently, especially with grocery retail, but not only. And I think that's where we're going after. We're going after this trend that says if we'll provide retailers and the consumers the ability to shop frictionless, not waiting in line, a lot more automated, that is a trend that if we provide products to, we hit it on the nail in terms of what the market needs. And the last 1.5 years definitely demonstrated we grow exponentially on these products.
But haven't we already got that those products? I was just at a store recently. One experience in store was horrible because it was frictionful experience, but the other one was, swipe it through and off you go. So don't they already have the innovation, the technology, or does yours go one step further?
It, to some respect, exists in different forms, but this market of retail is massive. I'll give you an example. The first major order for the hubs, the new smart cooler, was actually for fitness centers in Belgium. You'd think, wait a minute, there is technology. But no, apparently people that go to fitness centers, for example, want to step out of the gym or the session and they want to buy a healthy food going home. Yeah. Not a chocolate bar, not a Coke. They want to buy a healthy food. So they ordered 67 machines. They were sold and implemented. And within a month, there's like another order for another 40. In Australia, we've seen it with a wonderful lady that started to implement it selling vegan food. So she's only selling plant-based food, only she's not selling it from a store. She's selling it from the Innovendi, these smart fridges of us, because that allows her access into a gap in the market. Plant-based, vegan, healthy food in locations where people want to just buy it and eat. And they don't want to buy it from a vending that sells you snacks and Coke. They want to buy healthy from vending. And so absolutely across the board, you'll see different solutions, different developments. we think that we still bring something that fits to a lot of the needs of the market.
What do you say to those people that say a lot of people have got your type of technology? What makes you different? What's that sort of what makes Shekel Brainwave, your innovation side of things, better than what others might be doing?
Look, when it comes to frictionless shopping, I think there's always this: how do I detect the product? How do I actually know what the product is?
Yeah.
And we compete against cameras and image processing and image understanding, and we seem to do this a lot better than what image is doing. So, just for the sake of our quick conversation, let's say, for the sake of the assumption, if I look at the shelf of a supermarket, and I could actually define every square centimeter on this shelf and understand the weight in a 1 gram resolution, that's enough data for me to understand which product it is, let's say with additional manipulation. But how do I get to know the weight on every 1 square centimeter? One way to do it is to put 4,000 little weighs underneath the shelf. So 4,000 little weighs underneath the shelf with all the wiring and stuff would give me this data. Only that would be extremely complex and not really cost effective. We do this with 4 smart sensors and a lot of artificial intelligence. And that's the beauty. The tech behind the sensors themselves, how smart, how accurate and fantastic the sensors. But once you add the complexity of artificial intelligence, I know we're getting a bit more technical here, but actually the ability to create a talking shelf is something that requires integration of complex hardware and artificial intelligence and everything in between, changing the digital sensing, the analog into digital and stuff. That in itself created a complexity that is very hard for other people to reach. Not only this, if you now create a platform that does it very cheap and cost effective compared to the alternatives, that's where we think we're doing really well.
All right. I want to talk numbers because I think that's important. We have a community out there that looks and says, well, you're listed on the ASX, but an Israeli company listed on the ASX. Won't go into that. You're listed on the ASX. It's SBW as the code. What's the numbers been like? Talk to us about the end of June numbers that have come out.
So we haven't published the full results that will be published by the end of August. What we were able to put together was the numbers for the revenue for now. Okay. They show a growth of about 23%. We're now at 13.1 million US for the first half of the year, which is about 18.5 million Aussie.
That's across the whole company.
That's across the whole company, yes.
Yeah.
So 18.5 million Aussie for the first half of the year. Where traditionally, the first half of Shekel is lower than the second half. So traditionally, we've seen a stronger second half. But either way, it represents quite a nice growth of 23%. Where we see the growth on all the categories. So the healthcare, the retail. But what is really exciting is the startup. These innovation products have now reached 165% growth for the first half of the year, with a revenue of $1 million US just for the startup. Now, remember, this startup that took time to develop was at $280,000 US for 2020. It then grew to $900,000 US for 2021. And it now did $1 million US for the first 6 months of the year. So you start to see the exponential growth in demand for these new products. And not only this, these are normally products that has a higher profit and gross margin behind them. So I think that seeing this and being able to report 165% growth on this segment of the business is really nice. We will release, numbers for including the EBITDA and stuff by the end of August. But generally speaking, I think that we see improvement on all financial elements of the business.
A quick question for you, Danny. Do you think COVID has been quite good for the business? Do you think that's helped with the growth of the business? Because we're talking about frictionless going through and not having to deal with things. And also, I guess, on the other side of things, from a shoplifting point of view, it's good for the shopkeeper as well. But has COVID been helpful for you?
I would say yes and no. I think yes, because it creates the awareness and it creates the need for these products. And I think that it accelerated the understanding that you need to be much more accurate in the way you sell. And the fact that people need to be more frictionless in their behavior at shops is something that definitely helped us. On the other hand, we don't deal with some, software code. We deal with these machines. They're like, smart shelves and they're fridges. And during COVID, you couldn't do any business development activity. You couldn't jump on planes. You couldn't go see clients. They couldn't come to see you. And we were just talking about this before. We were at the Australian Vending Association only 3 weeks ago. And it's amazing. No emails can change what the people actually wanted to see in person. They actually wanted to see the fridge. They actually wanted to see that. So I think that, COVID in some respect delayed us from being able to actually go and market these products. But at the same time, we now see that when business is returning, office buildings starts to be more occupied. People do go into venues, people do go into commercial, then the need is absolutely there. So we're now enjoying the fact that we had to wait during COVID, and now the demand is there. There were more orders than we could deliver in the first months of the year. We couldn't actually deliver portions of the fridges that we wanted to deliver. There was a shortage of electronic components that we couldn't still get at that time. So that is good to see. There were orders that we couldn't actually deliver on time, and we're now delivering them.
I was going to say, so has that been sorted, that sort of the elements that you couldn't get, so you couldn't deliver the orders? Because I think if the growth is going to be strong, I think I mentioned before that the growth in this area, the frictionless checkout growth, is going to grow exponentially. It's going to be quite big. How do you deal with some of those supply chain issues?
It is definitely a challenge that requires management attention. So the whole issue of availability of parts and the cost of parts was something that the management had to deal with pretty much day by day in the last year. And there's some light at the end of the tunnel that we think is going to somehow, the shortage is going to be more manageable by the end of this year. But I remember for industries that used to work just in time, what we used to call just in time, you just order it when you need it. That's no longer the case. It's just when you can get it. I've heard of cases that, a computer chip that we used to buy for $9 went up to 45.
Oh, wow.
Yes. And that's if you're willing to wait to get it. If you want it today, that may be 110. So that was the differences. It wasn't $9 turning into 10.5. It was that difficult, and it's still an issue that needs to be managed alongside the shipping and the availability of boats and stuff. Having said all this, if you do it well, it actually gives you an advantage. If you do it well, and you can actually deliver to clients, you may even capture competitors' business. And I think that what we've seen is that by managing it well, there's a cost associated with it. But it actually can also be something that you could do better than others and manage it better. And I think that we'll still deal with these issues, but we'll deal with them in a way which is over time, I think, relax the pressure, and we may actually be able to take advantage of it and see how we do it better. Having said it, and we still didn't release the numbers, I guess, for the end of August. I think the team has done a wonderful job. I think from what we see, the team of the management has done a wonderful job, and I don't expect these challenges to be dramatically, hurting the business, if you will.
You spoke about competitors. You also spoke about markets. Danny, you're listed here in Australia on the ASX, but I'm assuming it's global. What I want to know is, where's the target market? Where's the growth? Because from investors' points of view, they want to know, well, where's the growth going to come from? It's a tech stock. How certain are you that the growth will be continuing on as we go forward? Where's the growth?
So you said it correctly. Most of the company's clients are not in Australia. They're very large. GE is the largest single client of the business. Between Fujitsu, Toshiba, Zebra, Diebel Nixdorf, the clients of the business are normally very large, and even the one that you see right now with collaborating on the venture is people like Colruyt in Belgium, and public companies, people in like Hitachi, Intel validated the tech. So it's really very large clients, and that's where we also see most of the market. So the orders are from the US, Europe, Asia. We do have some products that we sell in Australia. The regular product as well. There's a distributor out of Newcastle that sells our healthcare products here. But absolutely, the market is global for us. We are not actually centered in Australia. We're happy to see that there was very good interest on the Australian Vending Association, and few machines were sold right after the show. The Smart Bay, which serves as an autonomous store, building block of a technology, was immediately delivered to a new client. And
what's a Smart Bay? Give us a visual of what a Smart Bay is.
It's exactly like the bay that looks today on a supermarket, only it talks to you. I can actually know if you took a Barilla pasta sauce and not other pasta sauce. I can actually know if you took a Coke and return it somewhere else. And I know it the second it happened, not later, not from invoicing, not from the point of sale. I know it exactly when you moved it. So I could actually say to people that was moved out of this shelf right at this second. So that is what it looks exactly the same, but it's smart. It has sensors underneath every shelf, and the bay actually talks to me. Actually, we can actually, in the layman.
Is it behind closed doors, so to speak? I've just come back from the US, where a certain supermarket chain, which I won't mention the name, but everything was under lock and key, Danny, including the chocolate, and you had to press a little bell, and someone had to wander on over and get whatever you wanted out of this behind closed doors. How does yours work? Is it?
No, it's completely open. It's the reporting is done through software systems at the back end. You can take whatever you want from the shelves. We know it the second you took it, so it doesn't matter. And in most autonomous stores, you can't actually enter the place before you put your credit card or debit card or so on. So once you enter, I know how you need to pay. And once you enter the space, and it's almost like we're creating a virtual basket for you when you move around the space, the store. And every time you pick up product, they go into your basket automatically. And then you can just leave the store, but we know what you took. And then, we aggregate the basket into a sale. So the idea is that it allows you a very frictionless experience. You walk in, take whatever you want, walk out. The whole thing is done in the background, and that is basically the whole idea behind frictionless shopping. By the way, there's a new concept altogether that we haven't seen here, but we have received the largest single order ever for the business, and that is called Smart Cart.
Okay.
A Smart Cart is like you go into Woolies or Coles today and you have a cart, right?
Yep.
The new carts are going to have a scanner on them and a weigh on them. So think about it as if you now go with your cart in the supermarket and you put your products in a cart, and then you go into even a self-checkout. You take all the products out of the cart, you scan them, you put them into a bag and return them to the cart. What if the whole thing would be done on the cart level? So you actually take product from shelves, scan them on the cart, place them on the cart, and that's done. We know exactly what you took and how much you're going to need to pay. The whole experience is finished on the cart. And we received orders for these smart cart, for weighing units to the smart cart, for 5,000 of these. Back in January or February this year, already delivered. So there's very different developments in this field, but it's clear where the need is: automation in retail. We're going to need to do this much better than it is done today.
Yeah, I mentioned earlier that currently the market's about that sort of frictionless checkout, if you like, that retail side of things is about $2 billion, but the growth is coming over the coming years. Danny, I'm going to come to the share price in a moment, but do you think what you've got is ahead of the game, or the game is only just starting to open up?
We like to think about it as an enabling technology.
Okay.
We like to think about it that we now build the technology and the capability that allow people to actually do this frictionless shopping in a much more economical manner. So the curve is happening. Different companies develop in this field. I don't think there's going to be one solution fits all. It's going to be different retailers and different players, do what fits them the best. But if you bring in a piece of technology, an ability, a smart shelf that actually speaks, you actually created this building block that allow people to now do the things they wanted to do always, but in a cost-effective manner. And I think we're almost like an enabling technology. The fact that we develop it now allow the market to move into this space. I've been in this, I think 20 years ago, with machines that can actually inspect printed circuit boards line in a much finer and finer way. And people were asking, why do you actually do it? They don't do printed circuit boards in this level of lines. But it was actually enabling. Once you could actually inspect things to this level, they could be built to this level. Once you could inspect in a very efficient way flat panel displays and glasses, you could actually build them bigger. So in this respect, we've developed a building block of technology that now enable the industry to go and develop based on this building block.
Are you like Intel Inside? Is that kind of where Shekel Brainweigh is? It's like we're the brains, if you like, and everyone can use it. And is that a similarity? Because everyone knows Intel or Cisco, or whatever.
Exactly. It's exactly this. It's exactly this. We are the smart Shekel Brainweigh. So the idea is to weigh, but the brain is what is important here, is to create a piece of technology or an enabling technology that will be a brain that now powers all the frictionless shopping.
So it goes across everything. So as I say before, it's like Intel Inside, Brainweigh Inside. And so people basically turn around and go, we know it works.
Yes. That is basically the idea. We put this piece of technology exactly like Intel Inside that enable you to do the things you wanted to do.
All right. What do you think the share price has, since we last spoke, it's been pretty flat, if not a little bit in the red. What do you think? What do you put that down to, Danny? Do you think people don't fully understand? Because I remember when Intel first started and people were like, I don't understand. And now it's this massive, massive company. Do you think people don't fully understand what Shekel Brainweigh, how big the market and the opportunity is?
Look, we talked about it briefly before. I do think that in Australia, we lack a little bit of the depth of analytics which is required to understand the depth of certain tech. And people sometimes compare to us to any piece of code of technology or sometimes mobile app. And I don't think they can actually grasp the difference between them, or at least don't see them. Not to put it in any, how should I say? You need to be an analyst that was either involved in tech before, worked in a tech company, understood startups to actually understand the depth which is involved with this, to be able to differentiate. And I think that that's what we're lacking. So I think that what we see is that the people that has been with us for a long time do actually understand the company. We have few shareholders, both in Australia and in the US and Israel, that actually learn the company, understand what we do, and they generally stay with us. And I think that what we are not able to do is create a stronger demand, additional demand, that will actually, from people who actually will understand what we do. And I think that that's where the disappointment is, if you will, from a share perspective. The business in itself is doing wonderful, but it's the fact that we do not create enough demand from the market here to understand how interesting and the massive potential behind the company.
And I think that's the key. And your market cap at the moment, about 21 million. He just said, ladies and gentlemen, and look, do your own research. This is not investment advice, but first half of the year, the numbers have come in at about 18 million. So kind of do the math. What would you say to those people watching today about the future for Shekel Brainweigh going forward and the opportunity?
Look, I think revenue numbers will continue. I mean, this is definitely not a guideline, but the same trends that we've seen in the last 1.5 years, and we've seen it quarter after quarter, I think will continue. I think we'll see the business grow on all categories. And I think that the other thing that we should expect is, while we invested quite heavily into the development and the acceleration of the technology into commercializing the product, this investment starts to pay off. And in a sense, we will start to see the business going back to balancing its numbers. So what used to be, it was always a profitable business. We then invested in the tech. That required quite a lot of investment. We still do invest. But somehow the growth of revenue and the fact that we optimize things is likely to change numbers in the sense of, reduced cash burn, for example, and so on. So I think that's what we should expect: continued growth with maybe improvement. But that's, we still need to wait to the end of August to see the actual number for the first half. But I think that what we see is these two trends: the company going back into a more financial stable operation while they're growing the business.
And I think what you just said then, which I think people need to understand, is the company is a very strong company. It's not a startup, but there's a startup within the company that was taking out a lot of, sucking in a lot of funds to get that startup. But now, I guess, the pain is behind you and the growth is in front of you. Would that be a good way to put it?
Pretty much. Once you've validated the tech and you put it into play for the last 2 years and you start to see the repeat order from clients, then it's up to you now to manage how quickly you grow. And generally, we would want to grow as quick as we can.
Sure.
But we understand that investors also think, there's a whole change between growth and value. And I think more investors would now look at value as, returning into profitable position and maybe that would be so we can now more control better how fast we want to grow, and as long as we do it within a financial stable situation position, then possibly this would be more appealing to investors.
And a few more exhibitions where they sell a whole bunch more of their product along the way doesn't hurt either. Danny Nadri, thank you so much for joining me on Small Cap Today. Ladies and gentlemen, as I said earlier, the ASX code is SBW. Shekelbrainweigh.com is the website, and they are not just an advanced weighing technology company, but changing the way we're all going to be doing shopping in the future. It's all about that frictionless touch point. Danny, great to see you. We'll see you again soon.
Thank you, Kerry. And we're happy to be here again.